Bitcoin is poised to make a massive move, according to one very, very popular indicator, which is Bollinger Bands. We're going to talk about that, the Bitcoin chart, the Amazon chart, and all of the news driving markets today. Let's go. What is up, everybody? I'm Scott Melker, also known as the Wolf of All Streets. Before we get started, please subscribe to the channel. Go ahead and hit, smash, poke, tap that like button, the thumbs up right down below. Now, as I mentioned in the introduction, there are some signals that maybe this consolidation and boring sideways chop on Bitcoin is coming to an end soon. We're seeing some altcoin movement and certain indicators that would show us that potentially Bitcoin is going to be ready to move soon. Let's dive into the charts and all the news driving the market. First, I want to show you a daily chart that I posted on Twitter yesterday saying that this was a normie view of the Bitcoin chart. Of course, we have before Musk here at the beginning of 2021, the Tesla buy, which exited this range all the time when everybody was excited about Musk. And of course, when Tesla announced they were no longer taking Bitcoin, price dumped. Now we have after Musk. What's interesting about it, if you believe in the Elon Musk narrative, we're seeing that he does not move the market anymore when he tweets about even Dogecoin, which has just gone sideways the last 3 times he's tweeting. And basically, if you're an Elon Musk truther, you can see that price is now back to trading where it was before he was even involved. It's like he never existed. Now onto the daily chart. As you can see, still sideways chop in this descending blue channel. We've held this ascending blue support countless times. Now we are bouncing off the EQ of this descending channel. That's really, really encouraging to see it held as support on these two candles, both retesting it as support and moving away. Volume is non-existent, so it's very hard to get excited here. And we have this 50 MA right here, but a break of the 50 MA would be really key. That would be a significant sign that price is ready to go up to test the top of this channel and ultimately the top of the range. As I've said so many times, I want to make this clear. 36K is the middle of the range. I'll show you that in a minute, which could send us to the 40s, but there's nothing to get excited about until we're above 42, even 43K. That's when we can really start talking about a bullish reversal here. Right now, we have low volume consolidation after a drop, which leans more bearish than bullish. Here on the 4-hour chart, you can see absolutely no volume, nothing happening here, just sort of bouncing between these two zones. This is the demand I drew yesterday. It did hold as support after the drop. Now we have this supply in the EQ of the channel above. You can see why I'm talking about the 36K area. That's the EQ of this channel. That's that 50% level of the entire trading range. We want to be trading squarely in the top half of the range. That would indicate that we can go test the highs of the range up here around 42, 43. Still needing to break through all this resistance above 40. Bottom line, there's tons of resistance ahead. Now, listen, I've been sharing Amazon trades for a very, very long time. I want to take a very quick look at the Amazon chart because it's interesting and shows you why patience pays off. I don't really care about showing you a trade on Amazon per se. It's just a great example of what having diamond hands and strong hands can do for you. Now, I did post a trade recently here at the EQ. This is a great trade, right? You've got the weekly 50 MA, the EQ of the channel. That was around 3,200. Now you can see that Amazon has, as of yesterday, gone into price discovery for a new all-time high. Incredible. After a year of ranging, right? We're talking about 2 months of ranging right now for Bitcoin. This is a year that Amazon has been ranging since July of 2020. Now, if you are looking to trade this, you would look for a retest of that previous all-time high, something like this, and then price to continue up. But that's not really the moral of the story here. Let's take a look at the monthly Amazon chart. Because it looks a lot like the Bitcoin chart if you zoom out, or the Dow Jones chart if you zoom out. It's up only, of course, as you can see here. And if you had diamond hands since the beginning for Amazon, you were able to buy $1, $2, $3. After this dip, $5 in the early 2000s. You had this dip here. You could buy it at $26. It's trading at almost $3,700 as of today. Mark Yusko told me a story once that there were only 4 people left who bought the Amazon IPO. Jeff Bezos, his wife, and 2 other people, because every single one of them at some point got shaken out by one of these huge moves. I mean, we've had 8 retraces of over 50% on Amazon, one that was over 90% when the tech bubble burst. Every single one of those times was a buying opportunity and an opportunity for someone with strong hands to hold. But of course, it was a bookseller. People didn't know that Amazon Web Services would be a thing. At every one of those times, they eventually got shaken out because of their spaghetti, their weak ass paper hands. The moral of the story, Bitcoin is a similar sort of investment, the opportunity to have this asymmetric upside for years. So we can talk about trading it and dig into the charts, but the reality is all you want to do is dollar cost average, buy dips, and wait a really long time. I had a long conversation with Anthony Scaramucci about this yesterday, specifically about Amazon and Bitcoin, and that will be released soon, but definitely worth listening. Bottom line, when you have an asset like Amazon or Bitcoin that can change the world, you don't try to overtrade it. You don't even think about selling it. You just hold, even if it drops 50%. Now let's dig into the news. Here we have Bitcoin price consolidation may be nearing the end. Indicator suggests. That's what I talked about in the intro. The cryptocurrency saw big moves in December and April after Bollinger Bands fell to 0.15. You can see that we have an extreme tightening here of the Bollinger Bands, and you can see that level 0.15 down here. This has been a very popular indicator for a very long time, and a lot of traders use it. Anytime you get this tightening of the band, you expect major volatility. The caveat here is you don't know which side it's going to go to. You just know that it's been consolidating and that a major move is coming. We saw this last December and April when bandwidth fell to 0.15. Bollinger Bands or volatility bands place two standard deviations either side of the 20-day average of price. So we will be watching this very closely, as it says here in the article. To talk about those recent moves specifically, in April, when price went from 60 to 48, that was when the Bollinger Band dipped to 0.15, and the similar reading in December paved the way for a bullish breakout from the multi-week price consolidation below 20K. It seems that sentiment generally across a lot of analysts is that this would be a break to the upside, but it remains to be seen. Now, there's been much debate about the meaning of the upcoming Grayscale unlock. Investors cashing out of Grayscale Bitcoin Trust might bring market boost. Investors who locked in borrowed coins will need to repurchase those to repay the loan, cryptocurrency pundits say. That's interesting because JP Morgan pointed at this unlock as a huge headwind for Bitcoin, saying that all these people would be unlocking their coins and selling. But this is the flip side of that argument. Since Grayscale is trading at negative to NAV and there's no longer a premium, these people are actually losing money at the unlock and might have to buy coins to cover the short side of that trade. It gets a little bit more into it here. Lots of bearish chatter around GBTC unlocks, whilst conveniently ignoring that in-kind subscriptions funded by debt will ultimately translate into spot buying. Well, this is what JP Morgan had to say. Selling of GBT shares exiting the 6-month lockup period during June and July has emerged as an additional headwind for Bitcoin. Downward pressure on GBTC prices and on Bitcoin markets more generally. Really interesting to see the two sides of it. Then you go to Jeff Dorman from Arca. The biggest unlocks are happening over the next 2 months, which could lead to heavy selling of GBTC on the open market. That's from Jeff Dorman. As funds unwind this trade, he wrote, it could actually put buy pressure on Bitcoin, not sell pressure, as those who sell GBTC will have to buy back Bitcoin to cover the short leg of the trade. Bottom line, I don't think that we know what's going to happen here, but this does absolutely make sense when you think about it rationally, that it could spur spot buying to cover the short side of that trade. Bitcoin analyst says supply shock underway as Bitcoin withdrawal rate spikes to one-year high. This is from Willy Woo, who pointed out very recently that there is a huge withdrawal of Bitcoin from exchanges, outflows from exchanges, usually indicating that whales have bought and are moving to cold storage. You can see here that he shows that availability on exchange with respect to supply and that there is a divergence. Now, I love using RSI divergences, bullish and bearish divergences to trade. I've never seen one on on-chain metrics, but this is really cool and an interesting point. Bottom line, we're seeing a lot of supply removed from exchanges, which could lead to supply side shock. Next story, Ether could overtake Bitcoin as store of value, Goldman Sachs says. While bullish on Ether, Goldman denied crypto superiority to gold when it came to taking the top spot among safe haven assets. This is a really interesting take, one that I'm very surprised by. According to a report by Business Insider on Tuesday, the bank believes Ether's use case currently possesses the highest potential, being the most popular development platform for smart contracts. It seems to me that Goldman does not have any sort of fundamental understanding of what a store of value is. Bitcoin is a store of value because it's a superior gold for many, many, many reasons. Ether, as I've always said, has more upside, but seems more like investing in a platform, investing in the internet. To me, that is not really a store of value narrative. I think that they have it very confused here. One might be a better trade, the other one a better store of value. Here's what they had to say. Gold is competing with crypto to the same extent it is competing with other risky assets such as equities and cyclical commodities. We view gold as a defensive inflation hedge and crypto as a risk inflation hedge. No surprise here, Goldman doesn't get it. And as Scaramucci also said to me, you'll see in the podcast, he says, the day you see a glowing review of Bitcoin from Goldman Sachs is the time to sell. UFC inks $170 million sponsorship deal with Crypto.com. Huge 10-year deal for Crypto.com here to sponsor the Ultimate Fighting Championship. There's a lot of people in crypto are super into UFC. This is very exciting and follows the news of FTX and all of these companies doing major sponsorship deals. It's very clear that we're going into the mainstream, and you love to see it. U.S. congressman buys Dogecoin, Ethereum, and Cardano amid bull market. A lot of people on the internet telling Alabama Congressman Barry Moore to have fun staying poor. He seemingly bought near the top of the market on Ethereum, Doge, and ADA, and in his disclosure spelled Ethereum wrong. No surprises here. At least he did not call it Urethrium, which we have seen being a very popular misspelling of the word. Now, he is underwater a bit, and this came from his required disclosures that they have to make to Congress, but interesting to see at least that there is another congressman here interested in buying these coins, and he probably has about 5,000 to 75,000 total. Now on to sort of the biggest rolling news that we've had, which is Binance's trouble with regulators. Binance suspends Euro bank transfers amid regulatory heat. Due to events beyond our control, we are temporarily suspending Euro deposits via SEPA bank transfers from 8 a.m. UTC on July 7, 2021. This comes after we all saw Barclays telling their customers they can no longer deposit to Binance. Binance has had all kinds of issues with regulators of late. Binance said to be hiring UK version of Brian Brooks. We know that Binance US hired Brian Brooks, who was a regulator himself, to make sure that they were compliant. I think this is a good move. Obviously, we want to see Binance becoming compliant and working with regulators, and think of the challenges of having to work with regulators in every single country in the world and be compliant with those regulations. I can't even imagine what a headache that is. Binance CEO CZ responds to global regulatory pressure, calling compliance a journey. He likened it to the invention of the car, which makes a lot of sense. The car was invented. Cars hit the roads. As they saw the problems, they regulated around it, and it was always evolving based on the technology and what was happening. I think that's a very fair comparison, and I think that Binance probably largely is doing their part. They created a business. Now they're trying to get compliant, but we have seen pushback in Singapore, Thailand, other countries against Binance. It's going to be very interesting to see how all of this plays out. Guys, that is all of the news from today. I will be live today at 2 p.m. Eastern Standard Time, pending having internet, since I'm presently in the middle of a hurricane/tropical storm. Please check out my newsletter below. You can make requests if you're a member of the newsletter for the Chartapalooza today, and also check out my amazing sponsor, Femex. Until later today, peace.